So good afternoon, everyone, and welcome to today's SIFTA webinar on internal audit in microfinance institutions and social enterprise finance providers. I don't know what you guys think about internal audit, but I guess that to many people it's a kind of a good practice type of thing, just implementing internal audit systems, ticking boxes. But to me, it's a little bit more. It's part of a bigger game, and it could be really essential in terms of risk management and elevating institutional governance. So I think it would be important to think of it as a way to fortifying or strengthening your institution from inside out. And I think this is what also our this is the view that our experts will present. So today we will cover everything from core principles and strategies for uh, having a cutting edge internal audit system, including technology and the use of AI in shaping your internal audit. So today's webinar will take almost 2 hours or 2 hours, including questions, a session for questions and answers. But of course, as always, we encourage you to put your questions to the chat through the chat box. We will monitor it for your questions, and I will take a liberty of interrupting our experts and asking your questions. You can also make yourself visible and ask your question. We'll send the presentations that we'll be showing today after the webinar. Um, an important thing from my side, this webinar is recorded, and that's because of the requirement of the sponsor, and that is the European Commission, who actually designed this program of technical assistance to microfinance institutions and social finance providers. So let me present our experts who will guide us through this exciting discussion. So let me introduce Albana Ginopouli, who is a financial expert with over 20 years of experience in public sector auditing, currently serving as chair from the BESA's Supervisory Council. I'm sure you heard about BESA. It's one of the leading microfinance institutions in Albania. She also serves as director at Albania's Ministry of Finance and Economy. She's certified information systems auditor and specializes in internal audit, risk management, and audit harmonization. We also have today among us Joana Carvalho, who is compliance officer at Teresa, Portugal. Joanna holds a degree in law and with a specialization in corporate law. She began her career in compliance at Caixa Geral de Depósitos, a bank owned by the Portuguese state. And after working for these institutions, she became the compliance officer at RESA, a group dedicated to collaborative financing for SMEs, which basically means she works for a crowdfunding platform. Is this correct, Joanna? RESA is a crowdfunding platform for SMEs? Okay, and Piotr Koreński, many of you probably know Piotr. He's a development finance specialist with experience in over 40 countries, formerly leading global microfinance efforts at Soros Economic Development Fund. Piotr played a key role in launching many microfinance institutions in this region, but also globally, and he was instrumental in developing microfinance sector infrastructure like mixed platform and the Microfinance Management Institute. Okay, so let me also say a few words about the sponsor of today's webinar. Let's maybe move to the one more slide. So SIFTA is a program that was designed as part of the InvestEU Advisory Hub. InvestEU, as all of you may know, is one of the, if not the largest investment program in the EU. It provides guarantees that unlock private investment. It also has a segment on microfinance and social enterprise finance, which provides financial instruments to microfinance institutions and social enterprise finance providers, but also has this advisory hub, and SIFTA is part of it. So let's move to the next slide. SIFTA works in the EU. It has two legs, and as you can see on this slide, it's about advisory and capacity building and market development. That's one part. The other one is about rating, assessment, and evaluation. And let's move to the next slide. As I mentioned, it provides services to microfinance institutions, but also social enterprise finance providers such as investment funds, impact investors, incubators, and accelerators. The program is still active. It has been recently extended to December 2025. So we encourage those who are not part of it and are based in the EU to sign up. There is still time to do that. We're also in the process of negotiating the next round of SIFTA. So there is hope that despite all of the discussion of funding going towards defense and EU security, SIFTA program will be extended for a couple more years. So it is implemented by two consortia. On the left-hand side, you can see the consortium that provides advisory services, and that is the Frankfurt School of Finance and Management, which is the lead, together with the Microfinance Center, which I represent, and European Microfinance Network, and FEBA, a network of social banks. We also have Microfinance rating on the right-hand side that provides evaluation and rating services. These services are the rating services are necessary from the point of view of EU's policy. Access to EU funding is contingent on being certified on the European Code of Good Conduct, which is a standard for EU standard for microfinance institutions. We can help you as a consortium, advisory consortium, to overview your systems, to even to improve them from the point of view of the Code of Good Conduct, so that you can confidently go through the evaluation and assessment by Microfinance, which then would qualify you to become certified for the European Code of Good Conduct. Let's move to the next slide. All of the SIFTA services are totally free of charge. Maybe I should also mention that your institution is entitled to 15 days of technical assistance, but also you can participate in a whole range of workshop, peer-to-peer study, and exchange visits. We also organize webinars such as this one. So if you which are available to everyone, even beyond the EU. So if you're interested in SIFTA services, please take the opportunity that the program is still open, and you can shoot an email to EIB, which manages the whole program, sifta@eib.org. You will get an application form, which is not that difficult to complete, and then after a while, they will let you know whether you can participate in the program. Let me also say a few words about the upcoming SIFTA webinars, also sponsored by SIFTA. We will have in June, on 13th of June, there'll be a webinar titled Beyond Compliance, Operationalizing ESG for a Sustainable Competitive Edge, with two experts, two consultants. And then let's move to the next webinar. We will also have a webinar on managing a multi-generational team, how to lead and connect the talents and needs of multiple generations. And this webinar is planned for 27th of June. And last but not least, next week we are kicking off with the MFC conference, one of the biggest, if not the biggest, microfinance and financial inclusion conference in the region. We have lined up a very impressive set of experts in inclusive finance. The topic is on geopolitics and how they affect, how they will impact in inclusive finance, what's going to happen to funding, what sort of risks we will have to mitigate, new type of risks, what's going to happen to climate change program and agenda. So we'll discuss this type of topics. Also, technology will be prominent in those discussions. Also, we'll have the case of Cambodia, what happened there, and what are the lessons learned for the region. We'll also discuss the development of microfinance in Georgia, and many interesting topics. So there are still a few days for you. If you haven't registered yet, please take advantage of this opportunity, and let's also meet there in Tbilisi. So yes, I think with that I would like to pass the mic to Piotr. I think it's time to tap into those into the deep expertise of our today's speakers. Piotr, over to you.
Thank you, Gregor, and good afternoon, everybody. It's a pleasure to be here, and I hope, as Gregor said, we want to look at the internal audit function at the non-banking and microfinance institutions from different perspectives, and hopefully to bring out the very important point that it's not just a formal requirement, but it serves a very important function. So the agenda for today, it's a few questions that we'll try to answer. First of all, what is internal audit and what is internal control? What are the differences? And we will talk about the relation. We try to position internal audit within the organization and with overall structure. The second question is that we want to answer today is what are the potential models for structuring an internal audit function in non-banking or microfinance institution? It turns out that it can be done. There is a difference between small institutions and larger institutions, and there are certain models, several models which emerge, and we'll talk about them. And we'll have two case studies about it. Then we will bring out some effective strategies for internal audit, followed by best practices and resources and technical resources that are available for people who work in internal audit. And if we have time, we'll highlight a few ideas how artificial intelligence can be applied in internal audit in general and also in microfinance institutions. So those are the key topics of today. I will be presenting kind of the framework, general framework for this, and I will be asking Albana and Joanna, who are our guest speakers today, especially to talk about the specific aspects of it. So let me quickly start with, actually very quickly, if you don't mind, say in the chat, can you say how many of you are actually involved directly in the internal control or internal audit in your organization, which means, are you internal auditors? That would be very good too, if you don't mind sharing how many of you are directly involved in doing the job of internal audit in the organization. So that would be very helpful for us to understand. As you were doing a poll, okay. How many? Also, the second question: how many people are involved in supervision function? For example, in the board of directors or supervisory council. And then, how many people? How would you assess your knowledge? Are you proficient? Do you know a lot? Are you advanced? Do you have you're not less advanced? Do you have no knowledge about this? So we'll give you a moment to see what's the distribution of skills, knowledge, and functions. If we don't see any more volunteers, we can close the poll. Thank you for sharing your information. Okay. So let's start with the first question. What is internal audit and what is internal control? So here's a general definition. How do I stop sharing? I'm sorry. The definition of internal audit. It's an independent. I need some help to eliminate the poll from my screen. I don't know what to do with.
Okay, is it?
I think it's probably it's gone already. Thank you.
No, okay.
Okay, if it shows up, I will let you know. So, internal audit is an independent assurance function that evaluates whether internal control system. So we'll talk about what is internal control system is actually adequate, effective, and properly implemented. And the purpose of internal audit is to perform periodic objective assessments of overall organization, how the different systems and processes are working, recommend improvements, report findings to the board or audit committee, and provide an early warning for emerging risks. Albana, is that an adequate definition? What can we add to this? Can we flesh it out a little bit more?
Yeah, in fact, you did it in the right way, because you just underlined the most important words in the definition of the internal audit. But we also should consider that with the new standards, it is not called anymore definition, but is the purpose of the internal audit, which in fact is brought by you on the right side of this slide. and pointing out some of the characteristics of the internal audit. But what I would like start since the beginning, it's exactly what you said, that since the definition, we see that the internal audit has to do with the internal control, but they are not the same. So
yeah. And we'll exactly get to this, because I think it's very important to position internal control, which is very important, but this is not the only thing that is and internal control, good internal control is not going to actually save us from problems. So
yeah.
I want to present what's called 3 lines of defense model, which says that, you know, the internal control is the last, the defense number 3, the third line of defense. But there is before that, there is first line, which is operational management, the second line, which is risk and compliance. So let's look at this very quickly, and then we will see how. So the first line of defense is obviously operational management. This is where the frontline staff and managers, loan officers, branch managers are working, and they own the day-to-day risks. They manage those risks in a very actual way. They execute internal controls, obviously, approvals, reconciliations. They ensure compliance with procedures. So examples are really loan officers verifying documentation, branch managers overseeing various operations like cash management, or how the approval process is going, customer onboarding. So this is the first line of defense. This is the fundamental, this is the basic, quality of how organization is working. The second line of defense is risk management. So this is still a part of management, and it is independent control functions, but a part of what management is doing, and they design policies and procedures. They monitor how much risk, and we want, for example, the organization as a lending organization, we want to we provide guidance and tools like policies, procedures. And so here, the examples is risk management team that monitors various aspects of portfolio, compliance, ensuring anti-money, for example, anti-money laundering rules, and finance, various policies related to financing. So this is and the purpose is actually to ensure that the first line, the operational line, is actually doing their job. And finally comes the internal audit, which is an independent function. So this is not a part of the management. It's within the organization, but independent, and provides objective review of what's happening on both levels, operation on the first and second level, and reports findings to the board and the audit committee, which again not reporting to the management. So it is the fundamental issue is independence. And we'll talk about when Joanna from Rise will be talking about her case, how can we accomplish independence in a small organization at the moment. So here the examples, obviously, one of many, auditing loan documentation process where the files are complete, reviewing IT security controls, which is more technical, review of the systems, or assessing internal fraud prevention. And we will talk about the fraud prevention in a moment. So it's important to remember the internal control is not involved in daily operations, has direct reporting line to the board, and is independent. So this is like a comparison. By the way, Olivia, can we put this? We forgot to say that we have some of the things that we have on slides may be difficult to read. So we have handouts. Can we put the handout in the chat for people to download?
Yes, of course. I'm putting it in.
Thank you. And also we have, so that would be because we recognize that some of the slides may be difficult to read. So, and this one is also, again, a summary of differences between internal control, internal audit. But the key kind of summary to remember is what I just went through very quickly is on the handout. So that the internal controls are proactive and embedded in the organization. It's the fundamental way how we manage organization and manage risk. And the audit is reactive, independent, and third line of defense. Albana, how is that a correct representation?
Yes, in fact, it was a very clear explanation of the three lines of defense model, where we could clearly see the role of each, let's say, part of the organization involved in the internal controls and in the internal audit. And from your slides, we all understood that in the first line, we have to do with the executives, people who in fact implement the controls. They are obliged to follow up the procedures which in fact are decided or are approved by the top management, which is the board. And then we have the second line, which is a special, let's say, function, not working daily by day, because usually it has to do with the risk management and with monitoring and with the let's say, inspections, which in fact support the first line of defense. And then we have the third line, internal audit, which is not depending at all by the first two lines, but it is dependent only by the supervisory board, by the decision maker, and provide assurance, objective assurance about how the controls are implemented and how much effective were the controls of the first line and the second line. So, and I fully agree with the summary that you already show it, because the internal controls are proactive and amble. What I would like to underline is that, in fact, as you are showing in the table, the internal controls are decided, are approved by the decision-making body, by the board, but they are implemented by everybody in the institution, in the organization. They are not implemented once a year. They are implemented every day, every moment.
Yeah. Okay. And I want to mention, and then again, invite Albana to comment, because there is one very aspect which is not very, which is first of all, it's a very interesting company. I would like Albana to comment on this, but I just want to mention that no institution every institution is exposed to fraud, all types of fraud.
Yeah.
And then I think I would like to mention that internal control plays an important role. Albana, can you comment? First of all, can you explain the fraud triangle? Because I think it's an interesting, it's good to know.
Yeah. In fact, the topic of fraud is one of the key and most important issues that we have to deal when we design our internal control procedures, which is the preventive side. And on the other side, we should establish internal audit function, which will be able to assess if those internal controls, those procedures are capable to prevent and to detect on time the cases of fraud or any other, let's say, misbehavior and deviation in our institution. In that aspect, we have heard about this, let's say, fraud triangle, which has to do with three key elements or three key factors, which, if they happen, then we have to do with a fraud. The first one is opportunity. Opportunity has to do with the rules, the procedures that the organization has established in order to prevent that the fraud happens. So that is also part of the internal control from the aspects of how good we are in establishing procedures and regulations, rules, which should be able to prevent or detect in time cases of fraud. On the other side, there are two other elements which in fact have to do more with the internal part of the staff members. One is motivation. Motivation has to do with the reasons that can put pressure on the person to make a fraud. And the third one is rationalization, has to do with the situation when a person tries to rationalize his behavior when he makes a fraud. In very simple way, rationalization is the case when somebody is not happy with his salary and he said that, okay, I'm not working as I should do or according to my contract because I am not paid for what I am doing. Or I can benefit, I can take some money from the property or the asset. I can benefit from the assets of the organization because my salary is not at the level of what I am giving for the organization. So those are three elements. But what I only want to underline, because I think that fraud triangle is an issue that we can talk for days about, what I would like to underline is that as organization, we are, let's say, responsible only for the element of the opportunity. Not only, but we are more focused on the opportunity to set up rules and regulations which should avoid the risk or minimize the risk of that fraud happens. But on the other side, and these are called strong controls. On the other side, we should think about soft controls, which have to do with building up integrity, ethics, and professionalism within the staff. And that has to do with motivation and rationalization. So if for the first, for the first one, it's a bit easier because it's just written down. The other one needs time, but the effect is much bigger. Thank you, Piotr.
Yeah, and this is how the interaction between internal controls and internal audit works. Okay, so this is in the case of fraud is a very good example how it can work out in practice. Thank you, Alban. Okay, so now let's, if I can move forward. The second question that we want to answer today is what are the potential models for structuring it? How do we organize internal control function within an organization? And when I was thinking about it, I came up with 4 potential models, which we will describe them quickly, and we'll present 2 of them as case studies. So first of all, it's a central internal control model. The other one is decentralized, or one is centralized, decentralized, hybrid, which is a combination of 2 and outsourced. So the central model is very clear, probably the most very easy to understand. There is a single internal control unit, a department within an organization that oversees risk and compliance and manages the internal control functions, has staff. It's usually in small and medium-sized organizations and has dedicated control, internal control team, educated professionals who conduct internal audits and regular risk assessments, and provides oversight in a probably cost-effective and decentralized way. But because it is centralized, there's one department. In some cases, in this model, the team may struggle with specialization in some risk areas. For example, since technology plays such an important role, either we hire somebody who is really specializing in auditing, computer systems, software systems, AI. So, but so there may be some challenges to the centralized model, but it's very often. This is probably almost often the case. And so we can talk about, Albana, again, can you talk how BESA is doing this? Because this is an example of a large organization is because that has internal, especially obviously well-designed and implemented internal control systems and departments and using risk-based approach. Can you comment on Fondi Besa, how this is done as an example of a large organization?
Just let me say only a few words about Fondi Besa, although I know that most, being for such a long time as member of the microfinance network, most of us know about it. Fondi Besa has been established since 1994 and be operational on that field, and that is why now he is well known as one of the leading microfinance institution in Albania. It's a regulated and non-bank financial institution and owned by 33% of its employees and 67% by ABC Foundation. Currently, we rank 28,000 active clients, and we already own more than 150 million euro portfolio. Our staff, it's one of the factors that, in fact, rank us in the big, let's say, microfinance institutions. We currently have 77 offices throughout Albania, and where more than 650 employees are working. In fact, our institutional development has been changing over the years. As I said, we were established in 1994 as a department within the Albanian Development Fund, but at that time it was called Urban Microcredit Department, because we were focused only in providing microcredit for urban areas. But then in 1999, and that was exactly when I joined Besa for the first time, and microfinance as well. And since then, I'm in love with it and never will go out. It was established, the Besa Foundation, as a non-government and non-political organization, and it was supported by Soros Foundation at that time. But in 2008, we decided to transform our institution from an NGO to a joint stock company. And that was according to the new Albanian legislation. And in 2008, we were licensed by the Bank of Albania as non-bank financial institution. And then in 2009, Fondi Besa assets and staff were transferred to the current, let's say, status as a joint company, Fondi Besa. To be honest, for me, it was a bit difficult to go from Besa Foundation to Fondi Besa, because to Besa Fund, because we were used to call our baby at that time Besa Foundation. But the idea was that we took another position, another status, which in fact supported us for organizing Besa in such way and to take the leading position as we are. When it comes for the position of the internal audit function, the internal audit department works based on the international standards of the internal audit issued by the Institute of Internal Auditors of Florida. And according to the requirements of the standards, the department, the head of the department reports directly to the audit committee and to the supervisory council. They are organized, let's say, as a big department now, composed by the head of the internal audit department, and then senior auditors and junior auditors covering different aspects. They report annually to the audit committee, and the audit committee also approves the annual audit plan before sending it to the supervisory council. The audit committee is composed of 3 members of the supervisory supervisory council, non-executive members, which in fact supports let's say, the relation between internal audit department and supervisory council. According to the new standards, the global internal audit standards, which has been issued public in 2024, but entered into force in 9 of January 2025, domain 3, in fact, is dedicated exactly to enhance and to clarify the role of the board, which can be, as in that case, supervisory council, audit committee, or the head of the public institution, or the administrative board for public companies, and the relations that they should have with the internal audit department. So, as you see, it's a centralized model, but as we discussed before, and we will see during our presentation, that there are different ways, but also there are different factors which in fact pushed us to decide for that kind of designation of the internal audit department.
Question, Albana, if
Yes.
if VESA grows, and VESA is growing, becoming a big organization, would you consider necessary to put internal control in the regional offices, or expand the internal control? So moving from decentralized to more embed the internal control functions in, let's say, in larger branches, would that make sense?
I think that it makes sense, but always we should consider the cost-effective factor, first of all. And when I say cost-effective, it's not only a matter of money, but it's also about cost. I would like to say cost benefits, because the benefits that you can have from the internal audit not always are translated in money, but they are also translated in impact in the improvement that the internal audit could bring for the organizations. So, which means that not in every case we have money to bring back, and but we can always look for the risks. Maybe nothing has happened until now, but it could happen in the future. And that makes the institution to save a lot of money instead of just correcting what happened before. This is also why I say that it's a matter of professional judgment, but also a matter of cost benefits. It's always related with the maturity of the system. And I like how you brought that question here, because that seems that every decision should be appropriate to the level of maturity of the organization. At the moment, this model can be really good, and that can be effective one. But after some times, we see that the activity has been expanded, then it is necessary to decentralize, or at least to organize a kind of combined approach.
Yeah, and we have to recognize that every model that, my models are really theoretical here, but also each model has its own limitations, and they also have to evolve. So, Albana, thank you very much for this. So let's move to the second model from my classification, which is decentralized, or what I called embedded. And here, the situation is almost like the opposite of what Albana just presented, that we have a centralized function. Here, the internal controls can be spread out throughout the whole organization, so they can be put in different departments. And in this way, for example, credit department, operations, finance would perform the function of internal audit. And we will discuss in a moment how, what the pros and cons, what are the risks here. And the institution, it's very good for small, we believe it, I think it may be good for small institutions. There's one way to organize the internal control function if the organization is small. Each department has a designated staff responsible for internal control, and there may be a compliance risk or risk manager officer who coordinates all these different people involved in internal control. So this has obviously the advantage of it is that we can have real-time oversight in different departments, so we can capture different aspects of the operations. However, there are also disadvantages. There may be inconsistencies across departments. We need to train other people. We have to coordinate. So but this is another way.
Huh?
Go ahead, Alvana. Yes?
It's more costly.
And most likely it's more costly because we will have to engage more people. And so it's a more cumbersome model, but it potentially can work. And we have a case now from Joanna from Ryzen. I think I have to stop sharing it. Joanna, you were going to share, right?
Yes.
Okay. So Joanna it's a very interesting case. Joanna was going to share how we'll say what Ryzen is. It's an atypical, not a classical microfinance institution.
Maybe you can see it.
There's a little triangle. Oh, yeah, perfect.
Right. Okay. So first of all, I want to thank Piotr for the invitation. My name is Joana Carvalho. I'm from Reis. I'm compliance officer of Reis since 2023. Last year, we did the certification for the European Code of Good Conduct, and this is why we have to manage internal audit function, but I will explain it later. So about our group, I think it's important to know the group to understand a lot of things
Yes.
about our model, internal audit function. So our group is a Portuguese group that we have 4 companies, and each one of them has a specific role on our activity. The main one, the parent company, is Reis Instituição de Pagamentos, which is a licensed payment institution that handles the client's accounts and deposits, withdrawals, etc. So this company owns 100% of the other 3. One of them is Reis Crowd. It's the company that manages our crowdfunding platform, and it's where we assess the risk of the projects that we choose to make available to our investors. So these projects are only about legal entities. We do not finance private persons. And more recently, we have also started with bond issuances in addition to this crowdfunding activity. Then we have InsurReis, which is a life and non-life insurance agent. These insurance are linked to the key people responsible for the business that we finance at Reis Crowd. And finally, we have Reis Technology, which is the company behind all the technology and software that supports our operations. So we have this structure partially due to the regulatory environment when we started our activity. At the time, the law didn't allow the company to operate both crowdfunding platform and the payment institution, so we had to separate these activities. This is why you have all these companies. But although we have these 4 companies, we are still a small organization. Just you know, we are only 5 employees at the time. Internally, we have some workers externally, but for now, internally, we are only 5 employees. So last year, I was saying in the very beginning, we did the certification under the European Code of Good Conduct, and we had to find a solution for the internal audit function, which is a mandatory requirement for the certification. Even though, and this is an important note, it's not required by the Portuguese law. For that reason, this function didn't exist at Reis when we start the certification, the training for the certification. So at that time, this was our internal structure. You can see that we didn't have the internal audit function. And when we are creating this, we want to do something without relying on external providers. So we want to do it internally, mainly because of the costs that Alban was saying. So what we came up was that the compliance officer will assume the responsibility for auditing the other areas like the operations, the credit risk. And meanwhile, someone else internally too was designated for and it's the responsible for auditing the compliance. In this case, we choose the head of finance. But it's important to say, however, we do not have this internal audit obligation by the Portuguese law. We have an external audit every year of to the compliance. So every year an external entity that represents our supervisory body does an audit to an external audit to the compliance. So it's why we choose this model to stay internal. And that's it, I think.
How does thank you, Joanna. So how does the report, so how do you report when you do, I understand that you're still in the process of putting this together and implementing it. But how would the reportings, because, one of the, there are two questions, the independence, because you almost have two functions. You have the,
it's like two full-time jobs.
Your two full-time jobs. So one is internal control, because you're supervising, you're the level 2, you're supervising what's happening. So and you're level 3 at the same time for some functions, not all of them, but some functions. Does that create, so that looks like a conflict on some level?
So we try to, it's very difficult, I have to say it, but we try to separate all the functions. So I do compliance most of my time, and I do this internal audit to the other functions once a year, and I do some questionnaires to them, and I try to separate from what I see in the compliance. So in here at Reis, we have the compliance is most about ethics and conduct and IML, so anti-money laundering. And so I try to implement the internal controls, but then oversize them. So when I'm going to ask all the teams how they work and what they are doing, I'm say, okay, I create this. We have like advantages to this pro on this. I know all the internal controls, so I can ask them exactly all the internal controls if they have to comply. So it's a good thing at the same time, but yes, I have to work especially on the internal controls, create them, implementing, and then doing the audit after that. I don't
And
know.
especially it becomes a challenge when you have to, when it comes to report, because you have to be independent, to be in full compliance with good practice, you have to report to the board and kind of bypass the management. So that's another complexity here.
I try to be more objective when I'm doing this. So it's done or it's not done. We do not have that part of it's more or less done. I don't know if I'm explaining. So I try to be more objective as possible when I'm doing the assessment in the internal audit.
Yeah. Albana, as when you look at this model as an experienced professional, what do you say? What do you see? You're muted.
Sorry. When you say bad, that means that it's a risk behind. Always. But also our task is to find the most appropriate model which actually gives results from the implementation. I agree with this model when we have to do with small institution, as you said. It is effective. It is also cost saving. But on the other side, we should consider about the level of the assurance that we can get from that. So personally, I'm not in favor of outsourcing. I'm very, let's say, conservative and traditional in that part. Not only because it is costly. It's true that they have a higher expertise, but sometimes beside the expertise, we need the feeling in.
So maybe we can talk about maybe
Yeah.
because obviously here the choice that Reiser has, Joanna, was so either do it as they did, okay, distribute it and kind of internally,
Yeah.
or outsource, right? So that and the outsource is a cost, but also what else? Okay, so outsource is another internal control model when we actually hire somebody from the outside. How do you? Why you are not in favor?
As I said, first of all, it's matter of feelings. So it's just it's not that they do not feel, but they are just contracted. They come, they do their job, they give the reports, and then they are gone. Maybe when we start with the decentralized inside the centralized inside the institution, as you said in your slide, it can be costly because it needs staff training, but it's an investment.
Yeah,
When you outsource it, it's a cost, but it's an expense. When you do it by yourself, is in investment because it can be costly in the beginning, but then those knowledges are staying there.
But it is independent. So one aspect of outsourcing is actually ensures independence.
Exactly. Then this is one of the key risks for the internal controllers and internal auditors. When we talk about the independence, we never can speak for the maximum of absolute of independence, because the element of subjectivity is always there, because it's human. It's something human. But I could say that from my personal experience, I must say that this is the biggest problem for the public sector institution. But when it comes for companies, that means I think that this is a bit more moderate. And I also, from my personal experience, either in auditing or in microfinance, I think that the best way to ensure the independence of the internal auditors or internal controls is to create professional staff who is able to, let's say, to provide us with this reasonable assurance.
Yeah, yeah. But as a model, it exists, and some organizations are using it. Obviously, there's pros and cons for every model. Back to you, Joanna. Thank you, Albana. Joanna, so I know you're 5 people in one room, 4 companies, 5 people in one room.
Yeah.
Would you consider outsourcing at some point in time? If not, because you're so small, I mean, it's difficult to justify a separate, let's say, staff position within such a small organization.
We already have it for the compliance, at least. So I'm doing for the other areas, but for me, I have an external entity doing, and I share the feelings that Albana has about the external entities, because yes, they come, they do, they always don't understand the business, because we are a little different from the usual. So we have this this problem at the first beginning, and after that they do the work, they do the report, and okay, it's done. And
yeah, that's
now
true.
I have to implement and change everything by myself, and it's not always what they want that I do. It's very difficult to do what they want, and what we can do, it's very difficult. So I shared my feelings, the feelings of Albana about it. So for now, we are doing this. It's the first year that we are going to do, and see if it's going to work well.
Oh, yeah.
And after that, we could consider, but I don't think so because of the cost. It's difficult to justify the cost of an external entity. It's very expensive. At the same time, I don't know if the volume of our activity, and like we are fintech, so only we work only digital, and we do not receive money from physical money. So our risk is low. So I think it's for now.
Although you have a lot of operational risk, obviously.
Yes, but for now, and we are working a lot with the IT too. So we try to implement the most part of our platform, be automatic, most what we can, to try to manage all these activities. And like I said, I now have two full-time jobs.
Yeah. So obviously, there's not much as a outsourcing is one of the potential models for internal control. I hear there's not much enthusiasm for good reasons, because it is independent, but at the same time, it also requires management, and what we get through that model may not be adequate, or maybe not enough what we should have. So thank you for this, Joanna. Thank you very much. It's an interesting case. I hope it works for you, and I hope it will be inspirational for other people how to do it. And finally, so we have centralized, completely decentralized, we have outsourced model, and then we can have a hybrid. So we can combine different aspects of all these three models into a kind of hybrid combination, that you can have a dedicated functions and outsource some other functions, or distribute it. So it all depends. It brings me to so those are the four models one more time. The central model, where you have one central team, one is or embedded individuals, professionals within different departments, or outsource or hybrid. And this is here I try to kind of describe or kind of capture the pros and cons and strengths and weaknesses of different models, and you have it on your slide, on your handout, I'm sorry. But I think the question is which model is best, and it's the choice depends on factors like size, the complexity, the age, the risk exposure, the regulatory requirements. For example, in Albania, we have to have, in some jurisdictions, you have to have, it's required by the regulator to have internal audit function, but we heard from Portugal that it's not. And also these models evolve. Any comments, Albana, Joanna? How to choose a model?
Yeah, in fact, when Joanna was talking, I was thinking about this, let's say, how you said, this complex model. So we can always find the most appropriate model for what can work. Some part of them can be outsources, but still those which are what we can do, we do it inside. So that is what I was thinking. But I fully agree that those factors that you mentioned here are really the factors that we should consider. And I'm very happy that you didn't consider the cost here, because sometimes you just sometimes checking or let's say looking for money, we lose much more because of our decisions. So
that's true. I didn't say this, but at the same time, both you and Joanna mentioned cost and cost benefit. So cost, one way or another, enters into the equation, enters into the choice, right? But still, as you mentioned, the benefit, we cannot lose sight of it's not about minimizing cost, but actually maximizing benefit at the cost. Okay, very good. So those are my four models, and thank you both of you for presenting the cases. And now, very quickly, we want to go through the effective strategies. We identified about 10 effective strategies for internal audit, and I want to go through them quickly one by one if there is some comments. And the first one, again, I want to ask Albana, risk-based auditing, because I think that's an important issue. It also relates to cost effectiveness in general, but also cost effectiveness when we we be mindful of those areas which we believe should be actually audited. I recently had a case, and not everything has in the same strength. So can you elaborate on this?
Yes, in fact, I didn't go very in detail when I explained the approach that we are using in BESA. But this is because when I said that we were based on the IIA standards, since the beginning is very well underlined that it will be a risk-based auditing, because it's the most effective. This has to do with the effectiveness of the auditing in general as a function. That means that we always, after we prepare or we build up our audit universe, then we prioritize all the systems or based on the risks and the risk factors, as you have mentioned here, are categories and factors are different, but we always make sure that at least those systems or branches which are assessed with a high risk level, they should be audited every year. And then about the medium and low risk, then we will see according to the let's say the principle of the effectiveness. It is considered not really effective if we go for every single and simple issue topic to be audited, because there are then that let's say bears a bigger risk than what we bear. How we do that? It is because the risk assessment is performed annually. But that doesn't mean that our annual plans are not changeable, because the plan is a living body. It can be changed based on the situations, because we are living under such let's say changeable environment, and we have to look at the risk all over the year, because to be honest, we are there exactly to point out where the risks are and to find out if there is something happening going wrong, and then how to improve it, but sometimes even to give assurance that everything is going right. And that is why I fully agree with what you said here, that the main reason is exactly to maximize the efficiency of the audit resources, and on the other side, to align or to effectively answer to the expectations of the stakeholders, and especially to the supervisory board. I mean, always our bosses. In the case of BESA, I am part of that supervisor, but I just want to go through those most important and most risky areas.
Yeah. And I found one guidance which was issued by the Indian Reserve Bank. Olivia, I don't know if you can share those manuals. They produced a manual for risk-based internal auditing principles, which is very interesting. It may be for non-banking financial institutions. It may be too much for our situation, but it may be just for if somebody wanted to check how it can be done, because there is how. It's easy to say, okay, we're doing risk-based auditing, but how do we establish it? How do we prioritize those risks? So there's a whole procedure. There may be different institutions. So we will share this in the chat, the link to that document. The number one. Number two, clear audit mandate. I think that's very clear, that we have to have a very clearly defined the responsibilities, what we want to get out of the function, and it has to be approved by the executive, either by board or executive committee, audit committee. And these roles have to be clearly defined, and they have to have institutional support. Any comments on this?
Yes, please. It's time when I always would like to bring again into the attention of all internal auditors, but also members of the supervisory board, that now with the new standards, as I said, under the domain 3, governing the internal audit function, there are 3 principles, and the first principle 6, is authorized by the boards. That means that even the international standards requires that the board establishes, approves, and supports the mandate of the internal audit function. And then principle number 7 requires that the internal audit function should be established, positioned independently in order to ensure the independence and qualifications of the internal audit functions. At the end, to conclude, let's say, with the whole principles of the domains, it's overseen by the board, which means that the internal audit function should, or department should interact with the board, which means that should provide information, but on the other side should expect demands and should provide, let's say, results of the audit work, which should satisfy the requirement of the supervisory board. And one of the most the key issues regarding that has to do also with ensuring or assuring the quality of the audit. So that is why I wanted to stop for a moment, to stay for a moment on that slide, because exactly the audit charter defines the purpose, the authority, the scope, the independence, and the responsibilities of the internal audit function. It is a decision-making process, and that is why it should be approved by the highest decision-making in the institution, body in the institution, which is the board or the executive committee members. And also it should ensure the role clarity and institutional support for the internal audit function.
I have a follow-up question here, Albana.
Only one small thing. Audit is at least two sides process. So you always have at least 2 or 3 parts involved. You have the auditors, you have the auditees, and then you have the board where you report. And that is why we should have clear definition of the roles and responsibility of each stakeholders involved in the audit function.
It makes perfect sense, but there's a big responsibility put on the board or executive committee. Now, how do we know, or how can we ensure that the board knows what to do? Because it's a big assumption for me. Not every board that I have worked with or seen in my life has either competence or knowledge how to organize an internal audit function. So it is also a challenge.
Okay, usually there is a must for the internal audit function. As you said, at least in Albania, we have it regulated either in banking or non-banking system, in private sector, but also in public sector, which says that there are specific institutions which must have the internal audit function. And under those must, we have those requirements that I just mentioned, because when you establish the function, then you have to fulfill with the requirements of the international standards discipline by the, let's say, international organization. When in the very first slide, you said that the internal audit function is a disciplined and systematic function. When we say discipline, that means that we are led by a discipline, by a regulation. And when it comes for the internal audit, we have the international audit standards. Now, this is from the internal audit side. But as you said, not all people, especially in the supervisory boards or as head of the institutions, have really deep knowledge about the role, what they should do. And it's the standards, in fact, under the domain 3, clarifies the role of the head of the internal audit units or the internal auditors to explain to the board, to provide him with information how and what the board has to do. And that is also why it is very important to have an audit committee as well, because audit committee, beside the board, is an advisory body specialized for the audit regarding the relations with the board. On the other side, audit committee plays the role of a bridge between the supervisory board and the audit.
And can the just a clarification question, can the audit committee have people from the outside of the organization? It doesn't have to be necessarily all the members of the board or supervisory council.
Yes, it can be. The only condition that must be, let's say, respected is that in the audit committee, we cannot have executives from the institution.
Yeah,
because
that's
they
of
are
course.
subject of the audit of the internal audit function. But outsiders are always welcome. It depends. There are institutions which sees that it's better to have all the boards out, the member of the audit committee from outside. There are others which have all the members of audit committee from the supervisory board, but from the non-executive membership.
Obviously, yeah. Okay, moving on. This is kind of obvious, annual audit planning linked to strategy, so that there is the internal audit function, the department or however it's organized, it's working according to a plan. So that there is a plan, and there's a structure, how, which stakeholders are, which risk, which departments, which functions are going to be audited, again preferably based on risk. And so it's an organized function. It's not like it's not a random. So we cannot do internal audit in a random way, but it has to be organized. I think that part is pretty clear. And most organizations, like we have, I don't know about Joanna, but BESA has a structured plan organized. But with that, what happens when something else, how do other things, so there's something happens, so the audit has to go beyond the plan. How that works, Albana?
As you said, in fact, in BESA, as we have organized it in the way it should be, the internal audit department prepares the annual audit plan, risk-based plan, which means that the priority will be always for the high-risk branches or high-risk systems. It is a kind of study work, and it's responsibility of the head of the internal audit department, although it has to be done in the collaboration with the whole staff, because the information where I should be based to develop my annual audit plan should be taken from the previous audits, but also from the interviews and risk assessments. But the final decision, let's say, for the development belongs to the head of the internal audit department, and then the annual plan has to be approved by the supervisory board. There are cases when but before let's say the final approval, the head of the internal audit unit has to discuss it with the supervisory board, because maybe there are other issues that the supervisory board wants to see in the annual audit plan. This is the normal way, but we cannot avoid the fact that the risk map could be changed during the year. We can have some hot potatoes somewhere. It doesn't mean that the internal audit will say, no, I'm here only to implement the plan, but they have the task to study the situation, to understand, to make a kind of a reassessment of the risk, and to come up with the solution about what kind of audits they can perform. The only reason, the only thing that it is required in such cases is that those changes in the annual plan should be always approved so by the supervisory board, and not by the head of the internal audit by himself. So that is how it works according to the standards.
Yeah. Number 4, follow up and tracking the issue. So the internal audit can bring up number of inconsistencies, problems, challenges, risks, and this is not enough. Obviously, there has to be those findings have to be implemented in the organization, and that's a very important thing, because otherwise it would be just creating a report without any impact on the organization. So we have to make sure that all the findings and recommendations of internal audit are implemented. I think that's obvious.
Yeah, may I just say something?
Yeah, of course.
It is because now we started slowly from the basis, how to plan, how to do it, where we should focus, but then we come to the impact, the most important thing for the internal audit. Because in fact, why do we want to have the internal audit there? Because we need to see some changes. Some proposal for changes. We need to know what is the reality. And that can be provided only by the internal audit function. If for the plan, we used to say that it is the window that we provide to the board and tell them, look at here, from the window, you see the landscape, and here you see a building, you see a hole, you see a tree, which I will audit. I'm going to audit. With the audit report, this is the product, not the output. The output is the impact that we receive from the recommendations, implementation of recommendations. The audit report is the product, and it's like the shop window, the dress in the shop window. We can see there what was the work of the audit about and what they found in it. So that is very, very important. And the most important part within the recommendation, the report, it's the audit recommendations, because from the audit recommendations starts the changing.
And obviously, there have to be some sanctions for either departments or managers who don't comply, who don't implement the recommendations. Obviously, there has to be a system of sanctions.
Let's say not sanctions, but requirements.
Requirements, but eventually, yes. But things have to get done at the end, because otherwise,
exactly. Yeah, but in fact, what we should, let's say, be careful. Why we should be careful when we put some sections or rules or requirements, whatever we call them, for the implementation of recommendations. We must know that there are clear roles, definition, let's say, roles for auditors and for the auditees, for the departments audited. The auditors are responsible up to the providing the audit recommendations, which should be qualitative, implemented, easy to be implemented, and also understandable and appropriate for the findings. Then we have after we have fulfilled those requirements with the recommendations, the head of the audit department, so the head of the department who is audited has then taken over the responsibility to implement those recommendations in order either to correct what happened before, that the audit find out, but on the other side, to improve the situation, that what went wrong previously do not happen anymore. This is the change that the audit in general should bring. It's not only some money were lost there and bring back the money. No, it's not the point. This is so, but this is only a part of it. The most important, let's say, the heart of the problem is exactly to find out what caused that problem, that finding, and then give recommendation to fight the cause.
Yeah.
And not only the effect.
Yeah. Okay, moving on. Audit team capacity building. So obviously the audit team has to be well, these have to be professional people who know what to do. Ideally, they could be if possible to be certified, well educated and trained and certified with according to, as Albana said many times already, according to international standards, and continue developing their skills and proficiency in the area. So I think that's another part, and I think it's also often overlooked part of, we don't pay so much attention in professional development of internal auditors. What do you say, Albana?
In fact, this is an issue that we sometimes forget, because we are always focused on the operational things, the operational activities. But we forgot about such important issues which are developing the capacities of the internal auditors. In fact, we talked about the quality of the audits. I just mentioned the quality of the recommendations, but to have this qualitative work from the internal audit team, we must be sure that we have provided the right conditions, we have the right people there, and we have provided to them the right conditions to fulfill the tasks and the duties in compliance with the requirements. In fact, according to the international standards, an internal auditor professionist has taken that name only after he or she is certified. There are different systems of certification. The most well-known and internationally recognized certification is the CIA, as you mentioned there, or CISCA, which is delivered by the International Institute of the Internal Auditors in Florida. But there are also local IIA institutes which are affiliates of the mother institute. But that is not enough. Usually we used to say that the certification is just opening when you open the door of the profession, but according to the standards, each internal auditor should update and maintain their capacity, abilities and knowledge and skills through the continuous development program, training program, and that can be either through participation in other organization, but it can be very well supported by internal training. Peer exchanges are also very welcome. Sometimes for the junior auditors, on the job training can be also very very effective. But it is very important because it's a hidden key factor when we talk about the quality of the audits.
Absolutely, otherwise we don't have quality. Okay, number 6, leverage technology. So there is new technology coming up. Some people call it audit tech. I don't know how established the term is, but obviously we use all kinds of data analytics and data mining and automating processes, alerts, especially for those institutions which, and I just listed some of the tools, and I have no idea what they do. But obviously there are new various tools that are available, and the question becomes, it seems to me, more and more relevant for those institutions which are like fintechs, which are operated more on data, on automated processes, where we probably have the traditional methods of internal audit would not be appropriate, and we have to use technological tools to audit technology. Is that a fair assessment, Albana? Joanna also too, because Joanna, you're a tech company, you're a fintech.
Sorry, can you repeat, please, the question?
Oh, you're a fintech, right? So most of your processes are automated and actually technology based. So so the traditional methods of, you don't look at files so easily. So everything is actually automated and use technology. So probably in your case, internal audit could be automated also. You can use some tools for this, for that to see if the processes are working correctly.
Yeah, yes, we already have it for the compliance and the internal control. So it's actually something we have to look at because it's a huge help to have something automated. So since we are a small team, everything that we can do with the AI or something that can free the staff is obviously a pro.
Yeah. Okay.
Probably the part of sharing with the teams to the questionnaires for the audit and all that part, if it's automated, it's a long process that we can minimize the staff, and then some data analytics is very important too, because it's a lot of information to process.
Especially the technology, your technology company,
for only
your
one
data.
person. Yeah.
For only one person. So technology comes very handy. It's almost indispensable. You cannot do it without technology, but there's also risks. Nothing is without risk. So there's also a question in whether to what extent can you outsource completely the internal audit to, let's say, automated systems like AI? That's an open question, and there are lots of risks with it. But point taken. So we should leverage technology. Moving on. Strong governance and reporting lines. I think we have said this a few times, Albana. I don't think we have to comment, or do you still want to add something to this? But the strong governance and reporting lines, I think we have made the point.
I think we covered everything.
We covered this. There's a dual reporting. As you saw in BESA organizational chart, that the audit department is actually administrative reporting to the CEO, but functioning to the audit committee. So that's very clear.
Yeah, exactly. Now, that was also what I wanted to clarify when you show it the organizational structure of BESA. You could see that the relation between audit committee and here audit committee and supervisory council, it's a direct line, but between internal audit department, executive director, it's with dots, which means
but it's only for administrative.
But this is very important because it can jeopardize the idea of independence of
independent.
So
absolutely. Yeah, so that's integration with internal control and compliance. I think we also made this point that it has. This is how we started talking about internal control, how internal control is organized, and what's the distinction between internal control and compliance and internal audit. But these are functions that work together. We have to keep in mind they are not separate. Everything works together. It's a coordinated, function on all these different lines of defense. Number 9, and that's also interesting. I would like to get your comment because obviously we talked about plan. Everything is organized in plan. We know what we're going to do. But there's things like thematic, or ad hoc audits, Albana. So that's another way to change the plan, or either organize the plan according to risk. Is one way to do it, but also it can be thematic and it can be ad hoc audits.
In fact, we had a discussion 2 days ago in another Smart Interactive talk like that, because usually we have as a key performance indicator the deviations from the annual plan. And we try always to have 100% compliance with the plan, what has been carried out with the plan, which is not realistic at all. And because in a normal situation, we all know that not everything goes how we have planned. But secondly, it can also be a negative, let's say, a negative indicator, because we are not really agile in our function in order to move fast according to the needs of our stakeholders. So
absolutely. And obviously, we also talked about the board. I think we've talked enough, and I think we made the point several times with the board and management engagement. It's not like a appendix to the organization; it's an integral part, both for management and the board, or supervisory council. So I think we've made those points. Now, so practical applications, whether, how these best practices or principles are applied. Obviously, not every organization, well, ideally you would like to have all of them, but probably it's not always possible. But some of them are key principles that have to be implemented. Although some smaller microfinance institutions can, for example, may outsource and then have more generalist approach to auditing, while the medium-sized and large organization will have more stronger, more process-based audits with more stronger audit of that resolve specific issues. And the growing institutions can also, fintechs can actually consider, investing in technology-based auditing systems. So there are different institutions can imply, and I think in my handout I've tried to provide some guidance or ideas how different sized institutions can apply those rules in practice. So please consult the handout. Now, best practices, Albana. Here's probably I would like you to talk about You already mentioned global standards several times. And I think it's very important to reiterate one more time. For two reasons, because the standards are important, and the second time it's guidance for the profession, but it also provides resources for the professionals, and it's so. Here's the global international audit. So the audit standards.
These are the new standards, as I said, issued in January 2024, but they entered into force in January 2025, which means that a new era is now starting for the internal audit function throughout the world, either in private and public sector. I must underline that the standards, in fact, before the new standards were dedicated only for private sector. And in public sector, we had to deal with the fact that sometimes some of the standards had to be, let's say, implemented in the proper way according to the environment and to the situations of each country. Now, with the new standards, we do not have anymore that problem, because it is focused also part of them on the public sector. But we must know something, that the principles are the same. Now we see that the standards are divided in 5 domains, which helps the internal auditors to be focused also and to follow the process of the internal audit, and to have a clear view and not distributed everywhere of what should who should do or must do what. The first domain is just half a page standards, which has to do with the purpose of the internal auditing, which is nothing else than the description of the definition of the internal audit function taken from the previous standards. Then domain 2 is code of ethics ethics and professionalism for the internal auditors, but it's nothing else than the code of ethics that we had under the previous standards. When I say nothing else, it's not that it is a copy and paste. In fact, maybe the title could be the same, but the content is much more elaborated and brought into the attention of the users in very friendly way and more professional way. Domain 3, as I said, is where the supervisory board should find themselves their role, their own roles and responsibilities, because they do not have only, let's say, rights, but they have also responsibility, as I mentioned before, to create the situation, let's say the conditions that the internal audit function should operate effectively and independently. Domain 4 and Domain 5 are dedicated for the internal audit team. Domain 4 is for the head or the team leader of the internal audit, and Domain 5, in fact, is nothing else than the whole internal audit process. Those standards, in fact, are also the basis for the certification of the internal auditors, but also, sorry, but also at the same time, they help the internal auditors how to do their job. We must be clear in the way that the standards show where we should be, but not the way how we should go there. For example, in a standard, they say that the head of the internal audit unit should, or the chief executive auditor should develop the annual plan based on the risk assessment. Now, they do not provide any methodology how the risk assessment could be carried out. It's up to the internal audit director or chief executive auditor to decide how it should be. But the main reason, let's say, purpose is that it should be a risk-based audit. So that was just for as an example. Can we go a bit further? Now, in fact,
I have a question here, Albana.
Yeah, tell me.
So these are general standards. The standards, you said, they have been extended to the public sector, which is good. But so they apply to all institutions. Are there any specific standards or requirements for financial institutions or banks or non-banking financial institutions, or we don't? Does it exist or not?
There are no specific standards, because standards are, let's say, requirements for any kind of internal audit service. Doesn't matter if it is in banking system, non-banking, or public sector or private sector. They have to be fulfilled. That is why, in addition of those standards, most of the institutions, according to the industry or to the sector, they develop their own internal audit methodology or internal audit manual or internal audit procedures, which in fact should be totally, fully in compliance with the GIS, with the Global Internal Auditing Standards. That is why for all MFI, for microfinance institutions or non-banking institutions, it is a requirement that they should develop their own internal audit manual, which should be approved by the supervisory board. In that internal audit manual, we also will find also the roles and responsibilities of the board, the internal audit team, and also the auditees. So, and the way how they plan the audit, how they perform the audit, what is their mandate, to what level they have the access to the documents, because in the standards they say it is unlimited access, but then we know that sometimes there are secret, let's say, fields where we should have the principle of confidence. The principle of confidence is for everywhere because these are under the domain too. But when it comes for reporting, and especially for the internal audit function, the reports usually are very sensitive, and it is very important to be decided which of the reports should be published and which of the reports should be kept for the internal use. In different from the external audits, in different from the external audit reports, for the internal, because the external audit reports have to make them published, they are destinated for outside. In the internal audit case, they are, let's say, designed only up to the supervisory board, not for the outsiders.
That's a very important clarification. That so it has nothing to do with transparency. The transparency is for the external audit, but this is internal. So independent but internal, and that's a very important aspect of it. Okay, so. You just had an annual meeting of your Albanian chapter, so maybe you can promote the association. How useful is it?
As I mentioned in the beginning, the whole internal audit profession is led by the IIA in Florida, but all countries have also the responsibility to establish and their IIA chapters, which have to get also the affiliation from the IIA in Florida. In Europe, most of the countries, they have their chapters, but also because of the new standards, now most the other part is, let's say, is required to establish their chapters. Those chapters, as I said, are accredited by the mother institution, but they are also responsible to organize the certification of the internal auditors at the local level, but also to organize trainings for keeping update those CPD, continuous development programs for the internal auditors. It is advisable that the whole internal, all internal auditors working in non-financial institutions in banking system should be certified first of all, and also should be part of that chapters, because only in that way they can get really accredited trainings to develop and maintain their capacities, professional capacities, which is also a requirement of the standards. To be in compliance with the standards is not only to have the printed out the standards, to read them, and to make some good, let's say, nice visual documents. To be in compliance means that we should perform our function, our services in compliance with the standards, implementing those standards. So that is the requirements.
Okay, thank you very much. So we encourage people to, those of participants and who are involved in internal audit functions, to consider actually professional development, because that's very important. Now, we have just a few minutes late. We have a bonus section, so I try to come, since AI, artificial intelligence, is getting into every domain, and it means internal audit is also affected by in a positive and negative way, potentially, by artificial intelligence. I combined a couple of kind of highlights, and I want to go through them very quickly, and would like to get people's opinion on, it seems like the AI is the future, and we cannot avoid it. So the question is, how do we deal with this? Where do we incorporate it? How do we incorporate it? Where do we see the value added and the benefit? Where do you see the risk? So obviously the complexity of transactions, especially in fintechs, would justify use, as we just mentioned, for example, in terms of ERISA. It can help us to, the need for continuous risk monitoring, reduce cycle times and demand for data-driven insights. So obviously, there are several reasons why AI would be useful. And the key areas would be in planning, in actually all different aspects of AI can be used in all aspects of the internal audit cycle. So in planning, in testing, in field work, in finding out anomalies and fraud prevention that we talked about, in reporting and continuous auditing. So they can find that it seems like AI can be applied in all aspects of the internal audit cycle. In planning, for example, it can provide data mining capabilities to look at trends, look at something that is different. We can use predictive analytics to prioritize high risk areas as one way if we have enough data and this data can be analyzed. AI can help to use automated risk scoring using machine learning. So risk assessment is one aspect. It can also be applied in control testing and field work when we use robotic process automation for automated control testing, for example, invoice matching, if we all kinds of things that require looking at large data, or in natural language processing to review contracts, emails, and policy. Not everything is in. So those natural language processing can already and very much and high, and it can detect and help to analyze various types of documents, which again saves time and becomes more effective and efficient. Anomaly detection and fraud identification. I'm sure everybody has at least at some point in time had an issue with their bank, a financial institution that says, oh, they stopped their payments because the fraud was detected. So there is the automatic system tracking and looking at potential unusual patterns which can be better recognized by technological systems. It can be used in reporting and recommendations, obviously. So that's, all kinds of interactive dashboards the AI can actually speed up and allow to create reports faster, better, and more succinct and more quickly. And probably do support what the continuous auditing or internal auditing, because some functions, some things can be, for example, using AI can be monitored continuously without so becomes, some functions can become a continuous audit. There are obvious benefits. The coverage, the auditing may be broader, can be faster. The quality may be higher, may be more objective. The machine doesn't get emotions, so they pick up things objectively. It's better, more efficient use of resources, but there are also risks. And the data, everything is as good as the data. There can be also biases, how the AI tools are trained. There may be over-reliance on automation, and we should not forget that there is lots of aspects of the human aspects, as we started when we talked about the fraud triangle. So there's different aspects. That's not the only thing. We cannot fully, at least for now, we cannot fully eliminate the human aspect. Whether the model is transparent and can we explain it to everybody how this model is working, because these systems become very complex. So there is a model problem, there is a model risk in using AI. Obviously, privacy and compliance risk, those are important issues. And last but not least, how would that work with the system? Can we apply? Realistically, can we integrate or run those systems on what institutions have? So those are some of the how you tailor AI. Maybe There may be different levels of engagement, obviously, for smaller, medium, and large organizations. But I would like to get Albanas your view. How do you see this popping up? Is it happening already? And how is it? If it's happening, how is it happening? The automation in internal audit.
In fact, automatization, or let's say information, this
Technology.
technology for the internal audit has been always a kind of dream. Because
Oh, okay.
it's very, it's the best way to explain the situation. We need it, we want it.
Okay.
But because it's very, very costly, not always it's let's say effective to have them, or let's say can be afforded can be bared as a cost by the institution. So I agree with the idea of tailoring it according to the needs, starting from let's say the small developments, and then with the development of the institution, then we can cover it. For example, in the case of the organization, like a small organization like Joanna, I think that we are not allowed even to dream about it.
But at the same time, she's a fintech. It's a fintech, so on some level, it's almost better positioned for automation.
Yeah, yes, but in such that was what I wanted to say. That first of all, we should look at the internal resources. So this is for two reasons. First, because it can be less costly, but also because it is inside. It's something that fits to us.
Yeah.
It's not for the whole. In any case, for the whole, we have softwares which cover a big, let's say, lots of field or universe for the internal audit. But the best one is to have it shaped according to our needs. We also, I think that the artificial intelligence development it had a double impact on the audit on the audit function or profession. First, according to the tools that we can use to perform our audits, but on the other side, is that because of the most of the systems that we audit are automated, then it's not anymore a dream, but it's a demand, it's a need. And when it is a need, there are no more, let's say, justifications to say that we can.
Yeah. Okay, so that was just a highlight of the last point that I wanted to make about internal audit. So just quickly to summarize, and so that we actually in the minute that is left for us to summarize what we have talked about today is that internal audit is an essential function of a non-banking financial institution, but it can be a challenge, especially for small organizations. And we heard today from Joanna from Rise how it may be complicated to or challenging to organize such a function. But internal audit can be there is no one. There are several ways that it can be done, and we talked about the centralized, decentralized, outsourced, or kind of hybrid model that combines elements of all these other three. There is a number of good best practices, internal audit and strategies that should be followed, regardless of how the internal control is organized in an organization, and there is guidance as to how these best practices can be applied. And obviously, there is, since we're moving to technology, there is increasing requirement or need. As Albana said, it's no longer a dream; it's a necessity to incorporate technological solutions, even also to match the technological side of the organizations, especially with operating on data and fintechs, with the internal audit tool. So that's all what we had we have finished on time. It's
Perfectly.
which is perfect. Thank you. Gregor, back to you. I want to thank Albana and Joanna for your wonderful contribution to this to this presentation. Actually, a very interesting conversation. Thank you very much.
If you could stay maybe for a minute more, I would like to check if there are maybe some burning questions from the participants. I didn't notice any in the chat box, but maybe you want to make yourself visible and ask a question, taking advantage of the experts we have available for this. Please feel free to make yourself visible, to come up and ask a question or to the chat box.
Yes, in fact, I see that there's a question already here.
Oh, there is one. One has just come.
Yeah,
That's great.
and
Is it mandatory to amend the organization's internal audit charter with the implementation of the new global standards?
Yes, it
Okay,
is.
Albana,
Because,
yeah.
yeah, it is mandatory because it is a
Okay.
requirement from the supervisory function of the, let's say, central banks.
Yeah.
That all institutions should establish the internal audit function and which should be in compliance with the internationally accepted standards.
Okay.
So those which do not have should do it as soon as possible.
Okay, that's great. Thanks a lot for that. And are there any more questions? Actually, I have a question. If I could ask Piotr, who you may not know, but Piotr has helped many MFIs, many institutions that were applying for the Code of Good Conduct standard, and is very familiar with them and the systems they have for internal audit. So I wanted to ask Piotr, what would be some common blind spots, weaknesses that institutions have, typically smaller institutions, I guess, but also the bigger ones, if you have worked with any.
And as a matter of fact, this webinar, this workshop has been motivated by what I have noticed when I was reviewing several small and non-banking financial institutions, MFIs, for the code of conduct. That the major this is the last thing that each institution is thinking about. Okay, because which makes sense. You have to establish yourself as an organization. You have to, you have to organize the lending function, the process, everything is done. But the thinking about internal control, it comes last. And in many times when people read or analyze the code of conduct requirements, they say, they discover we have to have it. So it comes like an almost afterthought, which I understand. And it has been on some level, there are kind of two types of, some people will do it, yes, we'll do it. And most, the first reaction is the model that has been criticized here, outsource model. Okay, well, if we have to have it, we outsource it because that's the easiest way to do it. To be compliant, does it really fulfill the whole, provide the whole quality of the function that we should have from internal audit, or the quality of service that the internal audit provides? That's another question. But the immediate and the recommendation and the reaction is, okay, let's outsource it because it's not so easy. Joanna from Rise has actually attempted to do something different. So no, we're not going to outsource it. We're going to do it internally. So we use kind of the centralized model. So it is a struggle, and I think so. To comply, what I see the organizations have actually dealt with in such a way to comply. But the question still remains: there should be another step. How do we use this function forward? It should be done in an organization because it performs a very important function.
So again, the point would be to think strategically about this function, right?
Correct. It's not, as I said, and I think
not just compliance.
It's not. No, it's not actually. And I think hopefully we made the point, and Albana and Joanna have made a very point. It is an important function of the organization, and especially think about the fraud triangle. It's real. Okay. It's a very important. It's a very, but also other aspects of picking up and inconsistencies and problems and issues and risk, which in normal of daily operations, we are so busy we don't overlook, and we need to have a second pair of eyes to look at things. So it's a very useful function. It's not just a external requirement, especially when it comes to code of conduct. So yes, you have to comply. To comply, you have to do something, but then think about strategically how you can use it.
Yeah. Okay. Good. Great. So maybe with this insight, we'll close this meeting. Thank you so much. We've had brilliant experts. Thank you, Albana and Joanna and Piotr for your insights, for the time, for making yourself available.
Sorry, it's one question here.
Okay,
that
good. Yes, one more question. That's good.
It's about the fraud audit. So should or not should be in a regular basis a fraud audit in the annual audit plan. Now, fraud audit, usually it's something that happens when we have some indicators that maybe a fraud has happened. So usually it is by the request of the let's say, the institution, that maybe something has happened and you have to go there. It is difficult to plan it because it reminds me also a discussion that we had with the European Commission when we had to establish our public financial inspection unit. And they said that it's not possible to plan financial inspections because it's a kind of fraud audit, because you never know. Your task is to identify and to assess the risk of fraud. And sure, if the risk is high or even medium, because usually the risk of fraud, not usually, but risk of fraud is material by nature, doesn't matter the amount, then it is necessary to be in the audit plan.
And maybe think about from the triangle, think about the opportunity, where the potential opportunity may arise for fraud.
Exactly. If we found out that we have weaknesses in our internal control system, I mean, if we found out that some of the procedures are not working or are not implemented, that means that there is a risk there. And that is how we should focus our work. But usually, fraud audit is always happening when we have some indicators and upon the request of the institution. But what we have to do is to audit the risk of fraud.
Yes, so preemptively.
So this is the difference. When we say fraud, that means maybe it happens. But when we say risk of fraud, that means we don't have assurance that it happens, but there are many, let's say, factors that gives us the impression or the feeling that it can happen, and we have the obligation to have the risk of fraud as part of our audit universe.
And also, when an organization finds out there was fraud, actually, when we discover there was fraud, then we have to audit it in a way to prevent this, why it happened, and how to prevent it in the future.
Exactly.
Okay, super. There are no more questions. So thank you for these complimentary remarks and answers, Albana and Piotr. And thank you once again for your participations for this very interactive and in fact illuminating for me as well webinar. Thank you for that. Thank you, the audience, for your patience, and sorry about going over the time a little bit. I hope also this webinar was very useful to all of you. When you exit, the evaluation forms will pop up on your screen, so please take a couple of minutes to evaluate this webinar. It's important that we receive your feedback and improve at the future events of this type. So thank you again. Thanks again, and see you hopefully next week in Tbilisi, and if not, then probably on the occasion of the of the next MFC webinars. Thank you so much. Goodbye.